NASDAQ of 7 is 2112, and the S&P 500 at 3 points to 1,069. The yield in the 10-year note at 3.50%. Stocks zagging today as investors found some positives for the market in that surprisingly weak jobs report. The pace of job losses slowed, even though the unemployment rate hit 10.2%. Joining us now, Steve Forbes, CEO of Forbes Media, former Republican presidential candidate, author of the new book, How Capitalism Will Save Us. Steve Forbes, thank you very much for being with us, and give us your view of this unemployment rate popping above 10% today.
I think it's a reflection that the credit system in the economy is not fully working. Small businesses and consumers still can't get a reliable flow of credit. Small businesses are the biggest job creators in the economy, and they're still under severe pressure. So until that's fixed, until the dollar is made strong and stable again, we are going to have a very disappointing picture on unemployment, and unnecessarily so. There's no reason why small businesses shouldn't be getting a flow of credit again, particularly if we stabilize the dollar.
Well, we had just recently, in fact, just over the past week, the bankruptcy of CIT Group, a huge lender to small and medium-sized businesses. And a recent conversation with former Fed Chief Paul Volcker, he said that banks are still reluctant to lend. What do you think it's going to take to turn the lending equation around?
What's going to turn the lending equation around is two things. One is get a stable dollar so that when you lend, you don't have to worry about what you're going to get back. That's basic. We should have learned that 30 years ago. Second thing is that bank regulators and auditors should be getting off the backs of banks, and right now they're all over them saying, tighten up your lending standards, you got to do more tightening, and instead go in the opposite direction and say if you have a sound customer, even if it's a small business, make sure you don't make them insolvent because they can't get normal flows of credit. We've done this before in terms of urging the credit system to make sure that solvent customers are given lines of credit, and we should do so again.
What do you think is really happening? You think banks are hoarding cash instead of lending money?
Banks are hoarding cash because the regulators are still all over their backs, and they can make easy money buying treasuries. They can borrow at a very low rate, like 0.1%, lend it to the feds at 1 or 2%, and voila, why take the risk? So with I think we need a regulatory change, a change so the dollar is sound and strong again. And then I think the lending picture would improve dramatically. Even if you have a CIT going bankrupt, there's a lot of liquidity out there that would gladly fill the breach, but the environment is hostile to that.
How much confidence do you have that we are seeing an economic turnaround at the moment, and do you think it's going to be or already is a jobless recovery?
It is so far a jobless recovery, and I think the economy will continue to show growth, not very vigorously, but it's not going to be job creating on the level we need until and unless small businesses have access to credit and consumers have access to credit. Consumers are having a hard time, even if they have a job and perfectly good balance sheets. Many of them are having a hard time keeping or getting credit.
You hit on the dollar a moment ago, and today we're speaking on a day in which gold has hit above $1,100 an ounce for the first time. What's your view of what's going to happen to the dollar and the price of gold skyrocketing?
Well, the price of gold skyrocketing is the first and sure sign that the dollar is weak. And so I think it's very important for the administration to reverse the Bush administration policy of a weak dollar and say we're going to have a strong dollar as we did under John Kennedy, Ronald Reagan, and Bill Clinton.
Capitalism itself is under attack. You might have seen or certainly heard about the Michael Moore movie, Capitalism, a Love Story. You just wrote a new book that's out now, How Capitalism Will Save Us. Tell us how that's going to happen.
Well, Elizabeth Ames and I wrote this book precisely in a very conversational tone with questions and answers for people to understand the economic system when it's allowed to function properly. All of the major economic disasters, for example, that we've had in the last 100 years have had their origins in catastrophic mistakes by the government. For example, the housing bubble could never have reached the size it did if the Federal Reserve didn't print so much money, and if Freddie and Fannie hadn't guaranteed over $1 trillion of junk mortgages. So we try to get at the real root causes of what caused this crisis and have people understand how a properly functioning capitalist economy truly is. What happened on Wall Street, what happened with the Federal Reserve, that's not capitalism. That's an absolute perversion of it.
And, of course, we've seen more government intervention in business, and you do focus in one of your chapters, isn't government needed to direct the economy? What's your answer to that?
No. What government should do is provide an environment where entrepreneurs can take risks, be allowed to start new businesses, not have their property taken gratuitously or unnecessarily by the government, sensible tax rates and the like, and the economy will improve. When the government tries to direct the economy, it ends up hurting things. We saw that with Fannie and Freddie, which ended up undermining and nearly destroying the housing market, the Federal Reserve printing too much money. And now we see it with this massive binge spending, which is undermining confidence, undermining the dollar, and hurting economic recovery. The economy should be doing, Frank, much better than it is today, given how much it fell late last year and early this year.
Steve Forbes, Chairman, CEO, Editor-in-Chief of Forbes, former presidential candidate, and author of the new book, How Capitalism Will Save Us. Thank you very much for sharing your thoughts with us here today on the KNX Business Hour. KNX News Time, 1:23.